Yeah, I think investors right now are really seeing the importance of real assets as a strategic piece of their portfolio. And I think that there's a lot of things happening around us right now in terms of both policy, really around the world, which is part of de-globalization unfolding, but also all the infrastructure investments that are needed. I think you just highlighted some just a second ago. And so I think all this is leading into some pretty deep investment themes that is why I do think real assets, more specifically real estate, is going to be a very important piece of the portfolio for the next 5-10 years.
And specifically around data center demand, do you expect that continue? Because there have been some whispers, chatters around potential, at least a near-term oversupply of a data center.
Well, certainly the last few quarters, there has been a bit of a slight pullback from hyperscaler demand. We are seeing that. I think, though, you have to look at the overall curve of what's going to be required and where the pinch points are in the system, and primarily that's energy. And those problems aren't going to be solved anytime soon, and some of them are going to take a while to unpack. And so despite maybe a bit of a pullback that could persist even a bit deeper, I think every investor is looking at the longer curve of what's going to be needed, and the capital is going to have to come in and help solve the problems. And it's not only with data centers, it's also with energy.
And you mentioned investors' preference for real assets like real estate, given the level of uncertainty, geopolitical complexities that they are trying to digest here. And that has been really the conversation, right, in the second quarter of this year, at least, the de-dollarization, people are piling into gold and even Bitcoin and so on. So let's sort of think about the global picture and where the real money is going in terms of real estate investment. Do you see any decline in the demand for U.S. assets?
Well, first, there's a lot to unpack in your question. Let me first start out with the bigger picture and where demand for real assets is going to sit. I think it's really important for listeners to remember that the private markets and public markets are in very different places, and the private markets, specifically in real estate, have really been in a significant downturn that began in 2022 when a lot of the major Federal Reserve banks began a policy shift to help tame inflation. And for the most part, those shifts have happened and they're in the rearview mirror, and we have seen some declines in interest rates. But our view is that there is a deeper change which has now happened in how we need to be underwriting the cost of capital. And the cost of capital, as we all know, is a really important piece of any real estate investment. And our view is the next 5 to 10 years, we are looking at a greater secular trends towards a bit more stagflation in most of the major economies around. And in that world, rates will be a bit higher than I think we hope they to be, but also growth will be a bit lower. And in that world, it does mean that the cost to develop something, to build something down the road will be more. And further, there is a lack of new development occurring really in all the major economies in the world right now. And that is particularly concerning, and it's something that we don't think that the market is talking enough about. That lack of new supply is going to be basically a pent-up problem that rent growth will have to replace. But embedded in that is a deep opportunity.